Hello viewers, in this video I'll be going over natural gas, ETF ticker symbol UNG. Today we are up 2.8% and we have about 2 hours left in trading on the 1 hour chart. We are on positive MACD on the 4 hour chart. We are still negative on the MACD. However, we do see a convergence, the 9 moving average converging up to the 18 moving average. On the daily chart, we are still negative on the daily MACD, and right now we are above the 9-day moving average. If we do manage to close today's candlestick above the 9-day moving average, or this blue line, I would say we have a good chance that natural gas will head on higher in the next coming days. So if we were to head on higher, the next possible resistance we will immediately encounter will be around $20.30, and that coincides with the 18-day moving average and 50-day moving average, this yellow line. So that is our next resistance. And as for support, if we do head down lower, the next support will be around the price of $18.70. Reason why: on August 23rd to August 26th, we had a gap up overnight. So ideally, for an uptrend to be healthy, we want to close those overnight gaps, and that is at the price of, again, $18.70. So if we were to head on higher, that price movement is roughly around 3.7% to the upside, and to the downside, the price movement is roughly 4% to the downside. And let's head to the forecast model. And I'm glad to announce this software model is finally available in the link below. So go check it out. And let's head back to the forecast model. So I'll go day by day where natural gas will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below it is the trend that I believe is the best match. And this trend dates back to February 26, 2014 to May 22nd, 2014. Let me point out why these two charts are similar. So what we have in the beginning of the chart, we start off on the middle Bollinger Band, and then we proceeded to head down lower, and then after touching the bottom Bollinger Band, we made a nice reversal to touch the upper Bollinger Band in the middle of the trend. However, we do proceed to break down and head down lower to touch the bottom Bollinger Band once more. And then finally, we see sideways price action, a possible reversion to the mean, hitting the middle Bollinger Band right at the very end. So we see those price action there, and on here we start off touching the middle Bollinger Band, and then next touching the bottom Bollinger Band right there, and then next would be touching the upper Bollinger Band, making a nice reversal. And then after that, we see a breakdown to touch the bottom Bollinger Band once more, and then finally we see a reversion to the mean, attempt to touch the middle Bollinger Band right towards the end. So we have about 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the trend that we just examined was February 26, 2014 to May 22nd, 2014. Back then, natural gas was up around 5%. So we do see a possibility natural gas will head on higher. And again, this forecast model is now available in the link below, so check it out. Thank you for watching. If you enjoyed this content, feel free to like, comment, subscribe, and once more, thank you for watching.